10-year note yields opened the week nudging lower, closing out at 441. That's down about a basis point and a half from Friday's close. Call on Friday, we did trade all the way up to 4.5%. That's a new post-election high before reversing lower. We continued that ever so slightly today, closing out at 441. The only significant note today is that we stayed north of the 440 level for the fifth consecutive session on a closing basis. So after seeing yields move all the way up to 4.5% midday Friday, they backed off and they continued to do so today, closing out at 441, down about a basis point from Friday's close. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will notice that after that big move lower, after the election, after non-farm payroll, after FOMC, and last week's CPI, we have started to see volatility maybe creeping higher. It hasn't made any significant moves higher after the big move lower, but it has moved higher, and that continued ever so slightly today. Lastly, let's talk about what we have tomorrow. Tomorrow is Tuesday. The only data on the calendar will be the housing starts and building permits, and then we hear from Kansas City Fed President Schmid, who will be talking about the economy and on policy. So opening up the week, we see 10-year note yields continue to drift lower, closing out at 441 after making a new U.S. or post-election high on Friday, ahead of tomorrow's housing starts, building permits, and Kansas City Fed President Schmid.